Hello, good afternoon, everyone, and welcome to this Trading Economic News session. So I hope you're all well, in good health, and keep it safe. And it's the start of the weekend, it's Friday, last day of the trading week. Okay, we're just going to get ready for the report that is due out in 15 minutes. So we've got enough time to take our time and assess the situation and decide what we're going to do. So as usual, we start off with the economic calendar. Let me just bring the economic calendar up. Okay, so today is November the 6th of 2020, November the 6th. Again, always remember, use your own time zone. I'm using GMT +2. That's the Rwanda time zone. So that's GMT +2. So let's have a look at what's coming out today, although we already know what's coming out today. We've got the Canadian unemployment rates due out shortly, which is what we're waiting for. And most importantly, the United States unemployment rate and the non-farm payroll. As we know, the United States unemployment rate and the non-farm payroll, this report comes out on the first Friday of every month. So everyone knows it's coming out. It's highly anticipated. A lot of people are waiting for this report, and it affects all markets, all financial markets. It affects the bond markets, the fixed income securities markets, the stock markets, the commodities market, all currency pairs, all markets are affected by this report. So it's of extremely high importance. And like I say, it comes out on the first Friday of every month. So that's the United States unemployment report due out shortly in about 10 minutes. And the non-farm payroll, as we know, it's called non-farm payroll because there's a huge farming community in America, and farmers are excluded in this payroll data. So that's why it's called non-farm payroll. So basically non-farmers, non-farmers. So that's non-farm payroll, but more or less just like the unemployment rate is more or less the same thing. So that's what we're waiting for and anticipating. And obviously we can't ignore the fact that the US presidential elections it's not yet resolved. We don't know the outcome yet. We don't know who the president is going to be. And of course, it looks like, you know, it might also go to the courts. So it might take a while for us to actually know for 100% certain who is going to be the president. And again, don't forget, once there's uncertainty in the markets, and again, the key word there is uncertainty. So when there's uncertainty in the markets tend to trend sideways when there's uncertainty. And of course, there's going to be a considerable amount of uncertainty as we wait for the final outcome of the presidential election. So we also need to take that into consideration. So basically what I'm just trying to say is that I'll just be having one live attempt at the market every day until we know for 100% sure who the US president is going to be. So don't forget that in the background. And I think we've been doing that more or less since the election started. So that's very important. Don't forget that, you know, until this presidential race is resolved, there's going to be uncertainty in the market. And if there's uncertainty in the market tends to trend sideways. And due to that, like I said, I'll just be having one live attempt at the market every day until this is resolved. So if they're resolved it by today or this weekend, then Monday we can start our 3 attempts a day, or potentially 3 attempts a day. But if it drags on till next week, Monday, Tuesday, Wednesday, Thursday, or the whole of next week, we still don't know who the president is, then I will just be having one attempt at the market every day till we're 100% sure of the outcome of the election. So that's also what's going to happen today. We're going to assess the market, place our trades, but like I said, today included, I'm just going to have one live attempt at the market. That will be it, just one live attempt. And if I make 60 pips, fine. If I lose 20 pips, fine too. But it's just going to be one attempt, period. No more, no less. Okay. The other thing I was just going to highlight, I think I always forget to highlight that, because if you see on the, when you look at the economic report calendar, you can see they have the previous report. They have then the forecast, what the markets or the economists or whoever, what they think would be the report, and then the actual report when it actually comes out. So it's to, I'm going to talk about the significance of that. So because usually when you see this report at, the previous report, okay, now that you've seen this is the previous, this is the forecast, and then this is the actual report. So let's go to today. So you can see here the unemployment rate in the United States. The previous unemployment rate was 7.9%. And the market is forecasting that the unemployment rate is just going to fall slightly to 7.7%. So we're now waiting for the actual report. Now, usually, if the report comes out and it's more or less as forecasted, then you usually don't have much of a reaction in the market, because if it turns out to be what the market expects, then you don't get much of a reaction. Yeah, you might get some, but it might not be a violent reaction. So if the actual report now comes out and it's 7.7 or 7.6 or 7.8, and it's more or less what they forecasted. Now, if the actual report comes out and they see that unemployment has actually fallen to 6%, there's a big difference. So if it has fallen to 6% or it had gone up to 8.5% or 8%, then that's what might cause a violent reaction in the market, because the report is not what was expected, either good or bad. So that's where sometimes when you see an economic report come out and there's not much of a reaction in the market, it might just be because it is what the market expects. And then if there's a huge reaction in the market, it might be because the actual report was totally not what the market expected. So that's, sometimes what, again, it would affect your trading, obviously, but it's just something to know and be aware of, why sometimes the market reacts violently and where sometimes the market doesn't react much. It's just a question of whether the actual report is as forecasted or completely different to the forecast report. So it's just to highlight that. But of course, in terms of you deciding where to enter the market, where to trade, your trading plan, that won't change. This is just more for, just for info, just for knowledge basis. So I just wanted to highlight that. Okay. So obviously, Market Watch, as we know, the dominant news is the U.S. elections. So there's not really much else to think about or worry about. It's the U.S. elections that is by far the most dominant aspect of the markets as of now. Okay, so let's go to the trading platform now that we know exactly what we're going to do. And like I said, we're only going to have one live attempt at the market. So you can see this morning, excuse me, the market was trending sideways. I drawn my sideways trend, and that was the high and the low of the sideways trend this morning. But you can now see the market has broken that sideways trend. It has gone up. It's broken R1, fallen back down. It's gone back up again, and it's broken R1 again. So number one, this sideways trend now is now been broken and a new trend is forming. So we can now get rid of this line and concentrate on the new trend. Actually, what I could do is let's just adjust the lines. So that's now the current, let me make it bigger. So that's now the current highest point in the market. So you can see where the market has gone up from the new high. That's now the new low. We'll just see what happens. So that high there, it's 1.1884. 1.1884. Oops. And the low there is 1.1861. 1.861. So that's sort of a sideways trend now. Okay, so as you can see, R1, number one, R1 has been broken twice, so you can use it now to trade. And now looking at the current sideways trend is also within the sideways trend. So from a buy opportunity point of view, there are no buy opportunities. Actually, let's see if the market has formed a market resistance itself. Of course, we know the high there is 1.1844, and the high here is 1.18824. So it's actually formed a market resistance. So you could potentially use that to trade and buy. But I'm not going to, because again, it's too close to the market. Again, this is what you need to be worried about. You know, you don't want to be too close to the market, because if you place your pending order there now, very close to the market, normally, which is quite normal, when the report comes out, there'll just be this the market there'll be a bit of volatility up and down the place. So if your order is too close to the market like it is now, unfortunately, as soon as the report comes out, we'll just call up, take your order, go straight back down, take you out, and probably go back up again. So to avoid that, I'm not going to use this market resistance just yet. If the report comes out and the market falls, and then it's quite a distance from the market resistance, I could then potentially use it, but we'll see. But that's the reason why I would not place a pending buy order just above that market resistance now. It's just too close to the market because of the increased chance of the volatility once the report comes out, and you just taking in and out of the market quickly. And of course, we can't use R2 to trade, so there are no buy opportunities at the moment. If the market falls, you know, it hasn't formed the support yet, so the only place to sell would be to sell below the pivot point. And as you can see, I've placed my pending I've placed my pending sell order just below the pivot point. So I'm all set. So if the report comes out, which is going to come out shortly in about 2 minutes, if the market goes up, well, there's not much I can do. There are no clear opportunities at the moment. The only clear opportunity is to buy just above the market resistance, but that's currently too close to where the market is, and I can use R2 to trade. So the only opportunity is to sell below the pivot point, and I have my pending sell order there. So I'm all set. Okay. Any questions while we wait? The report is going to come out shortly. So if you have any questions, you can either click the hand button or send your questions through the chat box while we wait to see the outcome of this report. Also, obviously, like I said, I am just going to have one live attempt at the market, and that will be it. But of course, I'll update you all on the platform as the day progresses as to what happens. So we'll just give it about a couple of minutes after the report is announced. And of course, if there are no questions, then we'll end the session there. Because, you know, decision has been made. That's where I'm going to trade, below pivot point, no buy So yes, I leave the rest of the market to decide. So the report has been announced. So you can see it's now 3:30. So like, so we'll give it 5 minutes. So because it is what I'm talking about, you can see how it's just, moving up and down. And again, that's the thing about trading. Like I always say that trading is a bit of science, but it's also a bit of art. There's really no substitute to you observing and you witnessing things in the market and then applying it to your trading. Because again, this is why you can't really learn how to trade from a textbook. The only way you learn how to trade is by actually trading, seeing what is happening to the market, experiencing things that happen, and then that's how you begin to decide how to trade, when to trade, what to happen. But yeah, you wouldn't see something like this in a textbook telling you that don't trade too close to the market with a report. So again, that's why I always say that with trading, the only way you can become good at trading is just by actually trading. But most importantly, being observant. Try to make observations, try to notice things, and then see if there's a pattern. And you just add that to your knowledge bank as a trader, and then that helps you to make better and better decisions when you trade. But you can see this is what tends to happen once the report comes out. You can see it's just going up and down and up and down. So that's the danger. If your order is too close, you could get caught up in this up and down situation where it's still deciding what to do. Let's actually look at the report and see if so I'll just refresh the page. Let's see if if the report is as forecasted. So like we said, we saw the previous and the forecast. Let's see. So there you go. So you can now see the US non-farm payrolls. What happened to the unemployment report? That's disappeared. That's weird. But anyway, we can see the non-farm payrolls. The previous was 661. It was forecasted to be 600K, but the actual was actually 638. So it's actually much different from what was forecasted. And then the Canadian unemployment change, you can see previously was 9%. The forecast was 8.8%. So the actual was actually more or less what was forecasted, 8.9%. So the actual report was more or less what was being forecasted for the Canadian unemployment rate. Like I said, the U.S. unemployment rate has disappeared. I don't know why. I don't know why it disappeared. It'll probably come back later. Okay, so let's see what happens. So actually, this is actually good for us because if the market continues to fall like this, like say we'll wait for the 5 minutes to be over, then we can then place a buy order just above the market resistance here. So you can see patience is a virtue in trading. Don't let the market force you to do what you don't want to do. Again, that's another thing one just has to develop is the patience and not be tempted to jump and do things against your own better judgment. Because yes, the report could have come out and the market could have skyrocketed and we missed it and we had no trade. But the key is not to be tempted because, like I said, for the reasons I already gave you the reasons why I did not place a pending buy order there initially. And I'm not going to be tempted by the market to put an order there because I don't want to miss the chance the market could go up. So again, you just have to have that discipline and patience and sort of stick to what you feel is the best thing you should do. And yes, sometimes you might miss a move in the market, but that shouldn't let you change being objective in your decision making when you're trading. Okay, so you can now see the 5-minute candlestick has been formed. The market has moved a bit away from the market resistance. So now I'm going to use that as a potential buy. So I can now place a buy order just above the market resistance. So that's 1.1886, 2 pips above that. And 1.18866, which is 20 pips stop loss, and then 60 pips would be 1.886. I'm just doing that on my phone calculator. That's 1946, 1.1946. Oops, what did I do wrong? 1.1886. Okay, maybe I'm still too 1.1. Oh, sorry, my stop loss. My stop loss, that's a problem. Stop loss is 1866. There we go. My stop loss was virtually at the same level as my entry point. That's what was causing that not to go. So that's it now. So now I've got up my pending buy order just above the market resistance to buy, and got my 20 pips stop loss, 60 pips profit limit in place. And again, I am only going to have one live attempt at the market in view of the uncertainty regarding the US presidential elections. Okay, so really, there's not much else for me to do. If the market goes up and takes the buy order, I'll delete the sell order, and that will be my only trade of the day. If it doesn't take the buy order and it falls and takes the sell order first, then I'll delete the buy, and that will be my only trade of the day. If it just continues trending sideways, oops. Sorry, apologies. I lost connection there. Sorry, I lost internet connection. Apologies. Okay, anyway, I think we've more or less done. So like I said, I'm only going to have one live attempt. It will either be the live buy or the live sell, whichever happens first. And I will have one live attempt. Of course, if the market just continues to trend sideways all day, then I delete my orders at the close of trading today. Okay, any last minute questions before we go? Okay, good. So if there are no questions, I wish you all a good day. Enjoy your day. And most importantly, have a good weekend. Enjoy your weekend and keep safe. Take care. God bless.